So, back with another video. If you like my content, please subscribe, hit the share, like, and comments button, and always know that it is my goal to help you become financially free through the crypto market. So let's get started. About the term that is in the title, but first I want to talk about the more centralized version of that term, and that is the banks that we use. And I'm not sure if you noticed, but the money that we deposit in banks, they use that to make money off of us. So one of the first ways that they do this is through interest. So the thing is, so like it says here, you deposit your money in a bank account, right? And through that, you give the bank that you use, Chase, PNCF, TCF, give that bank the permission to use your money for loans. Example of these loans are mortgages, car loans, credit cards, etc. And here's the thing. So the interest rate that they use, that it might be maybe 5%, 8%, 10%. However, the crazy thing is about that. So if we do Chase savings account interest rate, the interest rate for you to gain off of is 0.01%, and that is extremely terrible. So yeah, you the borrower who needs a loan, you have to pay interest, when you use it. And as I've just shown, you get very little customers of that bank. They get very little amounts in interest. And the difference between the interest of banks and the interest that banks give customers is net interest rate. But you're still able to, even through all of this, the customer is still able to take out all of their money, because banks have to follow a rule, a minimum fraction of customer deposits on hand at the bank. Yeah, banks are required to keep a minimum fraction of customer deposits in the bank. The second way is through interchange. So basically, you use the that bank's card. You go to a store, restaurant, anything like that, and basically through that you pay the fee or whatnot, interchange fee. And apparently through this is how banks are able to give out high rewards off of credit cards. And also, the interchange fee is higher when the credit card rewards are used to make purchases. So very interesting. And then very similar to interchange, banks make money off of regular fees. So late fees for credit cards, overdraft fees, and ATM fees that you might have to pay. When you're trying to deposit or withdraw money. So yeah, overall, I don't think most people know this, but while you have your money sitting in your bank account, these banks, they use our money to become more rich. While we have to pay all these crazy interest rates, these banks give us very little rates. They give us very, 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 very little returns on our money. And honestly, 0.01%, I mean, you have to have millions of dollars to even benefit off of that. And I'll say like 90% of the population is going to be able to utilize something like that. So yeah, banks make a lot of money off of us, and it's worthless. You know, your money's just sitting there. You know, and it's just having your money in a bank account isn't going to make you any more financially stable unless you're just using it to, save money or keep it in a, holding spot. So yeah, you use banks, they make money off of you, and you get very little, very fractional returns in your savings accounts. But there's a huge solution to that, and as you see in the title, it is called Decentralized Finance. And if we look at this picture here, so of course, decentralized finance basically the decentralized version of banks. Um, Monetary systems is run on a blockchain. And the blockchain, of course, consists of crypto. Um, so DeFi, which is the short term for it, um, buddy better transfers throughout the world, better loan management, and you can create stable coins, which I will get into a bit. So, little quick comparison. You know, banks, they're more centralized. They aren't honest with what they do with your money, and you have to. It's more regulated. But with DeFi, decentralized, the bank is in control of it, permissionless, and it is more honest. Risk, like a bandwidth, um, and adoption rates. In my opinion, adoption rates, I wouldn't worry too much about this because, crypto as a whole is still new, and even DeFi is really popular. So I won't worry about that. And yeah, I definitely see DeFi getting more popular. It's already popular as it is. So yeah. So yeah, we go here. DeFi. Um, so this helps with sending lots and lots of money throughout throughout the world. So when it comes to centralized banks, a lot of issues occur when it comes to sending money, and along with that, they had to pay various amounts of fees, um, and I mean that's significantly decreasing your earnings, as it says here, employees earning less because of the fees that somebody's going to pay when sending it across to different countries around the world. But DeFi solves this problem, um, and this cuts the fees off by 50% or more. Um, so yeah, when instead of using centralized finance, DeFi will solve those fee problems. And since it's zero blockchain, it's going to send it a lot faster. Um, so there's also loans. Um, so DeFi, the loans are a lot more manageable. Um, Bankings, it's harder to it's harder to prove that you're eligible. Um, through your credit score or your banking record. Um, and it's easier through DeFi because it's run through the blockchain, and the blockchain is a ledger. Um, it's more trustless, and the data that is within the blockchain can never be changed. So it's a lot easier to have your records through the blockchain. Um, Also with DeFi, it addresses connectivity issues among lenders, which would be the banks, and borrowers, which would be you. Um, so yeah, um, and it will ensure better credit checks, and yeah, digital assets will be transferred a lot more quick. Um, Never changes in value. Um, and as it says here, stablecoins are a very crucial part of DeFi. Um, Stablecoins can be either used for um, the general population, or it can be released by the government. Um, and I'm going to explain how I see stablecoins as. Um, so yeah, an example of a stablecoin is Tether. So Tether is foreign market cap, and if you look at the graph here, no matter what, stays at $1. Um, Say if you have invested in a coin for a long time, say if you invested something like Bitcoin, you start off with $100, and then you went up to 10K. So if you want to get out of Bitcoin, you will put it in a stablecoin such as Tether. So the balance of 10K won't fluctuate. It won't go up or down. It will stay the same. So that's one use case of stablecoins. Um, and I'll demonstrate how useful stablecoins are later on when it comes to DeFi. Something else I want to mention about stablecoins. I mean, basically, stablecoins, they can act as your um, stablecoins are like banks to me. I mean, instead of putting your money in the bank, where banks, make money off of you, you could just put in stablecoins. And if you have your stablecoins in a wallet, cold storage wallet, I mean, you own that money, and nothing like centralized finance will be able to, take control of that. Um, and it's more, trustless. It's more, transparent. So yeah, that's another thing to think about when it comes to stablecoins. So now we get to the part of this article where it differentiates between centralized and decentralized finance. Um, so yeah, the finance that we know, banks, they work with centralization, less efficient, less security, um, security risk. Cybercrime is more evident in centralized finance, and transactions are also more prone to be hacked. Um, DeFi is decentralized, and it reduces the lack of security and efficiency. Um, and the three main things when it comes to DeFi that centralized finance can do. Um, it's run on a blockchain. Um, you don't need any permission. You can enter it whenever you want. Um, yeah, no central authority. It's not run by the government, and the blockchain is transparent because you are able to view um, people's transactions within the ledger, and that can never be erased because it will stay there forever. Um, and I know this talks about decentralized finance risk. Um, in my opinion, it does say that one of the risks is that it has a low activity rate. Not that many people are in it. But honestly, I wouldn't. DeFi is getting so popular now, um, and honestly, I wouldn't uh, worry too much about that. And honestly, DeFi, I'm going to make upcoming videos about this, applications that you can use. But DeFi is a very huge opportunity that you can take advantage of, and it can really, if you know the right applications to use when it comes to DeFi, decentralized finance. I mean, Hex actually is an example of DeFi. I mean, all the interest you could gain off your Hex is insane. But I will show more applications of DeFi that you can use that will make you more financially free within uh, the upcoming years of your life. That is the end of the video. I will make a video of a DeFi application that I believe beginners can use. We'll come out with a video about that very soon. But once again, if you like my content, please subscribe, hit the share, like, and comments button, turn on the notification bell whenever I post a new video. Check out the description below, and I will see you in the next one.